Every time I'm doing something that is not essential, I'm giving up on something that is essential. Greg McCowan. Greg's point is well taken. That is why we have worked so hard to put only the essential things in our charts. Those of you who study the charts with us every day, you know that our main indicator is the price percent oscillator. And the main thing we look for are weekly vertical crossovers or bounces off the red signal line. Why? Because you can follow them through time and they work again and again and again, helping you see price direction. Why? Because the weekly vertical crossovers on the price percent oscillator are amazing. They show significant changes in investor sentiment and price movement. And they don't happen all that often. So when they do happen, they are almost always significant and give you incredible opportunities for accurately following price trends. This is not guesswork. This is not gambling. This is studying each and every day, 10 to 15 minutes, practice trading until you get this down. You can do this. You can do this. 10 to 15 minutes a day, though, is what it will take. I encourage you to stick with us each and every day. I'll tell you how to buy the book, become a Patreon supporter, get all the special trainings at the end. Patreon members, don't forget tomorrow, Wednesday, the 11th of December, at 12:30 Eastern Standard Time, we have our monthly question and answer session where we get in depth even further into the training. If you've not sent questions, go ahead. Email those cw@chartingwealth.com. Let's jump into these charts. Stocks down for the day, bonds and gold up. But what do we see forming as the candle starts? We have a green open box candle. Now again, the high so far this week, 2 days in to a 5-day candle, $315.18. This last week, or actually the week prior, that's the week ending the 29th of November, 315.48. That was higher. And 315.31 the prior week with a red spinning top was higher. So again, not reaching higher highs so far. We see that reflected in the price percent oscillator and the derivative oscillator. Derivative oscillator losing momentum. Price percent oscillator is too. It's about flat for the week. And really, it's been going up since it crossed over going up back on the week ending the 1st of November. Cautionary week last week. This week is a green up candle. Little bitty so far. And again, price percent oscillator is flat. So we're paying attention to that. 2-day chart, of course, already crossed over going down and actually pulling away a little bit. So far, the first day of this latest 2-day candle going down. Derivative oscillator gaining downward momentum. So we're paying close attention to that. We go to the 4-hour chart. And again, looks like it's getting close to crossing over going down. Price percent oscillator heading down. Derivative oscillator losing momentum down in the morning. Reached really the lower low in the morning and then a little further sideways sliding in the afternoon, down 0.10%. So that's not a percent, that's 1/10 of 1%, not down too much. And again, all this sideways slide is well captured within the up candle on Friday afternoon. So what we're really seeing is a sideways slide as far as the 4-hour chart goes, tending down. If we do see a big down day on Wednesday. On Wednesday, that's when this candle will close the 2-day. So again, we're just continuing to sort of watch. We just sort of see that continuing. The thing that's keeping us from any trade is, of course, this weekly chart. It's still confirmed up, and I don't know how likely that is to cross over going down this week. That'd have to take a lot of down movement to make that happen. So again, we'll just continue to watch, see what happens. Might be more likely that the 2-day will rotate over going up. Needless to say, we don't have a trade right now. Let's go from the S&P 500 to the Nasdaq 100. What do we see going on there? Well, again, very similar to what we saw before. We haven't reached a higher high since the candle closed on the weekly chart back on Friday the 29th. This past week ending the 6th, and that was the 29th of November, the 6th of December, this past week, it was 205.18 so far this week, 205.59. So we have gone higher this week on the Nasdaq 100 than we did the prior week. The price percent oscillator losing momentum. It peaked all the way back on the week ending the 29th of November. And that's the derivative oscillator peaked. The price percent oscillator heading down at this point. Not just flat, but heading down. Still a ways to go. Not likely unless the market really crashes. Is that going to cross over by the end of the week? 2-day chart, again, pretty much a sideways slide going on for the last, what would that be, 7 days. We do see the price percent oscillator pulling away from the red signal line, derivative oscillator gaining downward momentum. And of course, the candle will finish drawing at the close of the market on Wednesday. So we'll continue to watch, pay attention to that. What about the 4-hour chart? Well, we saw where it topped on Monday morning and then moving down since then. Prices above the weekly trend line, but does appear to be getting closer to crossing over, going down. We'll just wait for stocks to sort themselves out. Just don't have anything at this point. Now we go to 20-year bonds. What are they up to? They were up for the day just barely, 1/10 of 1%. And no, that's not even 1/10 of 1%, 1/100th of 1%, 0.01%. So what do we see going on there? Well, we see the week again, it's a red spinning top indecision, tending down, price percent oscillator heading down, derivative oscillator still losing downward momentum. We go to the 2-day chart. We see it appears to be getting closer to crossing over, going down. Now, what are we waiting and watching? See how this chart closes on Wednesday afternoon. If there's a crossover going down, then, of course, you've got a potential jumping in point there. So pay attention to that. At the close of the market on Wednesday, you might be able to do a practice trade going down on bonds. Something to watch for. What do we see going on with the 4-hour chart? It's been going down for quite a while prior to the sideways slide that pretty much started, well, when bonds sort of bottomed on the 6th. And for the last 3 days, really sliding sideways. Price percent oscillator still negative. Derivative oscillator losing downward momentum. So keep your eye on things. Maybe there'll be a 2-day vertical crossover at the close, toward the close of the market on Wednesday. Might give you a jumping in point for a trade, practice trade in something like TBF. That's the inverse of TLT. Now, back to the weekly chart, and lastly, we go to gold. Gold was up for the day, 0.28%. So that was our biggest up move for the day, biggest gainer out of all 4. 2 were down, 1 was up, along with gold being up the most. So we see that the price percent oscillator still moving down as far as price movement on the Heikin Ashi candlestick sideways. We have a red spinning top, indecision tending down, derivative oscillator losing downward momentum. We go to the 2-day chart. Now remember, I told you to be careful about that crossover. And again, very iffy at this point. Gold was up for the day, 0.28%. Looks like that blue, it's hard to tell. Blue line still below the red. It's a tough one. Price percent oscillator, again, pretty much laminated. Derivative oscillator gaining a little bit of upward momentum. The first day of this latest 2-day candle is a green doji indecision tending up. We'll see how that sorts itself out. I'm not going to redraw the crossover because I can't really tell what it is at this point. We'll wait and see how things potentially sort themselves out tomorrow. If they do start pulling away on the 2-day chart, then of course you might have a jumping in point again. Watch for that potentially as we check, of course, the 4-hour chart, which gained a little bit in the morning, red spinning top in the afternoon. So again, watch gold for a potential 2-day crossover going down, along with bonds for a potential 2-day, let's go to that 2-day chart again, crossover going down at the close of the market. Those are bonds, and this is gold. Just let's see how that sorts out. Could be a big up day tomorrow for bonds and gold. Nothing of the sort occurs. But again, maybe you'll have an opportunity. We shall wait and see. Remember, all things being equal, the market tends to move in the direction of the largest chart, which is still down on gold and still down on bonds. Folks, that's where we are as we end the day on Tuesday. Go into Wednesday. Again, a reminder, 12:30 Eastern Standard Time. Our Patreon supporters, that is when we'll have our call-in. The links are in your show notes, plus some special trainings that we wanted to make sure you had. I encourage you to watch those before we talk tomorrow, see if they generate anything. And I'm also going to be discussing with you as part of our training the Monday effect and how we supercharge that with one little trick up our sleeves. Okay, friends, that's where we are as we end the day. If you hadn't purchased our book, see the link in the show notes. Our book, Charting Your Way to Wealth, 13th printing. I'm sending out a bunch of copies along with our Stock Traders Journal, which includes your daily market worksheet, weekly market worksheet, and trade worksheets. Each Stock Traders Journal actually is a 3-month journal, so you can keep up with the market on a daily basis on those daily market and weekly market worksheets, and you keep up with your practice trades too. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.